Okay, I think we can start. Thank you everybody for for joining. My name is Talbar David, and I'm the CEO of Complete. Complete basically is a sales tax platform that manages sales tax all the way A to Z, and able to solve the pain points automatically of the sales tax. Today, we are going to discuss mainly on UK companies selling to the US. And this is what we're going to spend the next 40 minutes, more or less. I want to have some time also for questions. I know that it's a kind of a new concept for many of you, and we'll dig into the stuff along the way. But it's important for me to answer any question that you have, obviously, later on. So about us, as I said at the beginning, we are a cloud-based platform that integrates to your financial systems like ERPs and payments platforms, and able to assist you with the calculation, the monitoring, and the filing and submission obligation in every state. What we're going to discuss today is to give you a slight overview about what is the sales tax, why do you care, and why you should be care about sales tax. Then we're going to dig in about the fundamentals of sales tax. As you can see here, the term nexus, and how your products and services being affected, whether it's taxable or not. We're going to discuss about some exempt transactions. We're going to discuss about the compliance cycle, how it looked like, and then at the end we're going to discuss about our platform to show you how things done properly and easily with automation. So let's start about sales tax. Okay, sales tax basically is the indirect tax that we have in the US. We're familiar in Europe with the VAT, but the problem with the sales tax is that this is a concept that is being different from state to state. Basically 46 states plus Washington DC has enacted the sales tax rules, and this is a consumption tax where going to be finance all the infrastructure or whatever things the state want to pay for. So it's a financial engine for the states, and this is why it's very important for them. There are 5 states that don't have any sales tax legislation. We call that the nomad states. So it's New Hampshire, Oregon, Montana, Alaska, and Delaware. I put Alaska with some caveats, but because in some jurisdiction within Alaska there is a sales tax. What does it mean for you when you sell to someone in those states? You can be rest assured that sales tax is not an issue over there. But generally speaking, again, sales tax is a consumption tax that you need to collect from your customers when you do a transaction with your US customers. And again, we'll dig into it later, but it doesn't really matter if you are engaging to B2B or B2C. I know that in Europe with VAT, you have a difference specifically about also digital products, but in the US, it doesn't really matter whether you are selling to a business or to individual. Now, let's dig into the main question that we always want to ask ourselves, and how we determine whether we need to collect sales tax from our customers. Usually UK companies has 2 different alternatives to sell to US customer. It can easily be done through the UK, where they engage directly to the US customer, or they have a UK parent company, and then they have a US subsidiary, and then the subsidiary sells to the US customers. In both cases, as long as your customer is located in the US, you need to ask yourself a few questions to understand whether you need to collect or not the sales tax. And it doesn't really matter if the transaction being generated from the UK entity or from the US subsidiary. Because the first question that we need to ask ourselves is whether I have Nexus. Nexus, basically, it's the connection for me as a business to the state. So let's imagine that you are doing a transaction from UK with someone in New Jersey. So you need to ask yourself whether, as a company, you have Nexus in New Jersey. Nexus can be established by either, there are few alternatives, but the main ones are physical Nexus or economic Nexus. We're going to dig into in the next slide. After we realized that we have or don't have Nexus in the state, then the second question is what I'm selling, whether my product or services are subject to tax or not. And this is where it becomes a bit more complex because every state has different legislation and regulation about different services and products. For example, SaaS is a subject to tax in New York, but it's exempt in California. So it very depends what you are selling and where you are selling. But if you realize that you have Nexus and your product is taxable, then you need to collect the sales tax. Now, when we want to understand what is the tax rate, here it becomes more complex because it's not like VAT where you have a flat rate because sales tax is state and local tax. And that means that we always need to see what is the address of our customer and based on that to calculate the taxes. For example, if I'm doing a transaction with someone in Manhattan, so in Manhattan the tax rate would be 8.875. But if I do a transaction with someone in New York but in Brooklyn, so in Brooklyn it would be 8.65. The range is not very big, but it's important to collect the accurate tax rate. So those are the 2 or 3 questions that we need to ask ourselves. Now let's dig into each one of them. Let's start with the Nexus because this is the substantial change that was done recently that affecting foreign companies like UK companies when they are doing a transaction in the US. So as I said, the first question that you need to ask yourself is whether you have Nexus in the state where you sold your product. So Nexus, as I said, can either be established by a physical presence, like physical Nexus. A physical Nexus can be either if I have offices, a warehouse, and obviously employees or inventory. That creates me physical Nexus. Or if I don't have any people on the ground and I'm not doing, or I don't have any offices, I still might have Nexus because of economic Nexus. And this is the big change that affected foreign companies. It's called the Wayfair case. And the Wayfair case was, I think the ruling was at the end of 2018, but it took some time to the states to adopt the concept. And last year, all the states adopted the concept of economic nexus. Economic nexus says basically that even if you don't have any presence on the ground of the state, if you have substantial activity, economic activity in the state, that can also trigger and create you a nexus in the state. Now, most of the states ruled that the substantial threshold, the economic threshold, is $100,000 or 200 transactions. This is the most of the states, but we still see some states where they have higher threshold, like New York, for example. New York has $500,000 threshold and 100 transaction. So it depends on the state, but again, generally speaking, most of the states' threshold is $100,000 or 200 transaction. We see a trend now that some states eliminating the number of transactions, like the 200 transaction, and keep only the dollar amount threshold. But this is the main two options that you have for you to have nexus, so either physical nexus or economic nexus. But the economic nexus is very important to understand because it specifically came to catch foreign entities, because usually when you are selling from your UK company, you don't have any presence in some place. So you don't have physical nexus, but you might have economic nexus because you exceeded the threshold. Now, there are some questions about, sorry, what are the periods, what transaction should be counted in this threshold? And again, it's very dependent on the state. Some states are looking on previous 12 months. Some states are looking on previous or current calendar year. So it's very dependent on the state. Some states calculate gross sales as in the $100,000. Some states calculating only taxable sales. So it's very dependent on the state. But it's important to mention that regardless your physical location in a specific state, you might have economic nexus, which will trigger for you to register and start collect taxes because of the concept of economic nexus. So this is nexus. We'll summarize things later on. Now, the product taxability. So the product taxability and service taxability, it's an issue because every state wants to encourage different type of businesses, so they can play around the taxability. It can be changed along the way, but each state decides how products are taxed based on their unique laws and needs. Now, as I said at the beginning, let's take, for example, SaaS, okay, or computer software. SaaS is subject to tax in New York, but subject in, it's subject to tax in New York, but exempt in California. If I'm selling a SaaS in Texas, it's subject only to 80%. Or, for example, in Connecticut, it's only 1% rather than the state normal rate. So each state, it's a bit different. I can tell you that professional services, for example, usually exempt in most of the states. However, the other side, called the tangible personal property, TPP, so those type of items, like tangible items, tend to be taxable in most of the states. So it very depends what you are selling and how it's being treated in this specific state. Obviously, there can be some complexities where your product is not very clear about what is the right classification for sales tax purposes. For example, if you are selling a bundle that involves some setup fees and involves some tangible items, but also involves a subscription component, then there is a question: what is my product? Is it a SaaS? Is it a tangible? So it can get complex, but in most cases, the state has a good, I would say, a bit old but good interpretation of the product list, what is taxable and what is not. So to conclude those two sections or two last slides, again, I'm going to my original question, and when I'm doing a transaction with a US customers, either business or individual, I need to ask myself two questions. Whether I have nexus in this location where the customer is located, it can be physical nexus or economic nexus. If I said no, okay, so I don't really care about sales tax anymore because I don't have nexus. But if I do have nexus, then I need to ask myself, what is the taxability of my products, whether they are subject to tax or not? And if yes, to collect the tax rate, we need to calculate based on the specific address. So we've made here like kind of a chart or diagram that can simplify what you need to ask yourself. So I'm not going to repeat it like from scratch, but every time that you are sending to the US, you need to check whether you have physical or economic nexus, and if yes, if your product or services are taxable, yes or no. So this is like the simple chart that can help you to ask yourself every time that you do a transaction in the US. Now, I want to, I know like I said it's simple, but it can get a bit more complex. There is another thing, okay? And I said at the beginning, exempt transactions. We need to ask ourselves eventually who we are selling to, because there are different types of exempt transactions. Exempt transactions can be either because my customer, my client is exempt. For example, if you are operating or selling to a governmental institution or a non-for-profit organization, so sometimes they are exempt from sales tax because of the nature of the business. Sometimes if you are not, as I said at the beginning, sales tax is a consumption tax. So it means that you should collect sales tax only when you are engaging the end user, the end client. So usually resellers and transaction with the resellers or distributors are exempt from sales tax. And I'll give you an example. Let's say Adidas, okay? They are selling shoes directly to consumers in the US. Obviously, this is subject to tax, but they also sell their shoes to Walmart or to Target. So the transaction between Adidas and Walmart is exempt from sales tax because Walmart is not the end user. They are resellers, and they will, when they will sell the shoes to the end user, so Walmart will collect the sales tax. So this is another option, and there are sometimes specific exemptions for specific items that the state want to encourage. But eventually, when you are invoicing your client, if they are claiming that you should not collect from them sales tax because any one of those reasons, your obligation is to collect the certificate that claims that. If you are engaging a reseller, so you want to get from your reseller or from your customer a reseller certificate, or if you are operating with a non-for-profit organization that claim that they have exemption, that's fine, but please obtain the exemption. And why it's very important, because if you will be audited by the state and they will tell you why you didn't collect sales tax from this customer, you'll tell them, listen, it's a reseller or they are exempt. So the auditors don't really care what you're saying. They want to see the evidence that you got and that you document it as an evidence. So this should be an exempt transaction. So don't rely only on what your customer tells you, whether they are exempt or not. Always insist to get the appropriate certificate that justify and give you the evidence that they are really exempt. So that's about the cycle of how we know when to collect the sales tax and when not. Now, let's discuss about the compliance side. Because you are now you realize you have Nexus and your product is taxable and you collected the tax. So now what happens? Once you hit the Nexus, either physical or economic threshold, basically you have the obligation to register for sales tax within the state. Yeah, also foreign companies can be registered for sales tax and start to collect and remit the payments. So the registration process is not that complicated. It's just to fill a form. Then you get your sales tax permit, and from now on, you are obligated to report on the transaction that you are doing in each state. Obviously, you need to register only in the states where you have Nexus. If you have Nexus in New York, you don't need to do anything in other states. It's like very specific by the state. Then upon the registration, the state will tell you what is the filing frequency that they want to get from you. It can be monthly, quarterly, semi-annual, and even annually. It can also be changed during your operation if they see that you started as a quarterly filer, but then eventually your activity has increased. They might want to change your frequency to monthly and the other way around. So after you register, you started to collect the taxes, you collect it from your customers, and then you hold it for a certain period, depends on your frequency, and then you need to file a report to the state tax authority. And when you submit the report, you also need to pay and remit the taxes that you collected from your customers. Eventually, I know it sounds like very complicated, and when we want to do that, I can tell you something that it's always something that you should monitor. Eventually, sales tax doesn't come out of your pocket. Okay, eventually you're a pipeline of the states or arm's length, whatever you want to call that. And you don't really have a lot of motivation to do tax planning, like in income tax, to do some planning around sales tax, because it doesn't go out of your pocket. You need to add and collect the sales tax when you need, when you have the obligation, and to remit it to the tax authority. But if you avoid it and then you wait with too much, when you realize that you want to handle that, and you look back on your back transaction, you realize that Nexus was triggered already a while ago, and now you won't be able to go back to your customer and tell him, hey, listen, I was supposed to invoice you with a sales tax, but I didn't. It won't happen. He won't pay to you. So this money going to go out of your pocket. So it's very important to understand the motivation and to start handling sales tax properly from the first day that you operate in the US. I know that it sounds confusing, and it's a lot of things to monitor, but thanks that we have technology, and this technology can do for you a lot of things. And this is what we are doing here in Complete. So let's see how technology can streamline our sales tax obligation. As I said before, Complete is a platform that integrates to your ERP systems. Okay, if it's Oracle NetSuite, QuickBooks, or even like other payment platforms like Stripe or Shopify, wherever you're doing your transaction, we are able to integrate. And within the integration, we are able to do a few things. One is to monitor your obligation. As I said before, not necessarily you have Nexus from the first transaction that you do in the US, because you have threshold of $100,000 or 200 transaction. So every transaction being stored in our database, even if it's below the threshold. But once the system recognizes that you have crossed and hit the threshold, you will get an email notification automatically. Hey, dear finance team, please pay attention that you have Nexus in New York, and you need to register. So this is our ability to monitor your obligation 24/7 in whatever state you are operating. So this is one thing. Then obviously our tax engine, which is the core of our platform, does for you all the calculation direct to your invoice. So let's imagine that now you are issuing an invoice from your ERP. You put your customer detail, you put the items that you are selling, and then once you hit on the save button, our platform calculates behind the scenes what is whether you have Nexus in this location, and if yes, whether the items that you are currently selling in this subject to tax in this location, and if yes, what is the address, and bring you the accurate sales tax rate directly to your invoice. So the second thing is the calculation. The third is your ability to report and do your filing. So as I said at the beginning, all of your transactions are stored in our database, and our system knows what is your filing frequency in each state that you are registered. So once the due date is approached, our system generates the sales tax return automatically, and then send it to you for your approval. And once you approve it, so we are automatically submitted your returns to the tax authority and handling with an ACH to the payment also to the tax authority. So you don't really need to remember when you have a nexus, whether your product is taxable or not in this specific state, what is the tax rate. Everything is being done automatically. Obviously, you have access to our dashboard where you can see exactly where you have nexus, how close you are to the nexus, where you are filing, all of your files, and all the confirmations of payment. So you have one-stop shop of all of your sales tax obligations. I know that sometimes implementation of platforms is something that might sound like something complex, but we have developed a very unique way of integration that the integration takes just a few hours. It doesn't require any R&D or efforts from your end. Everything being done by our solution engineers. We will see exactly what is your current flow, and based on that, we will provide you the proper integration that fits to your needs. Obviously, our platform is being secured by the highest standards, including SOC 2. But we also guarantee that all of our calculation and deadlines will be, all the filings will be on the deadlines, and all the calculations are accurate. So this is something that is very important to know. And eventually, I think it's the system and the platform save a lot of time, because it's very complex to monitor the different tools in different states and when you need and what you need to take. So it saves a lot of money and time, and you always have the ability to get some insights about your standards and about your situation in each state. Before I finish, and I'm going to give you some time for questions. I think as a foreign entities, and when I say foreign to the US, companies just recently realized that they need to collect the sales tax from your US customers. What we usually do during when we meet clients, we do something that's called the sales tax assessment. And doing the assessment, we are able to understand and to analyze your historical data and to give you a report that tells you exactly where you have nexus up to date for today, where your product should have been taxed, and where you need to collect sales tax already. So you can get a snapshot of your situation today. And I think that the sales tax assessment is an amazing tool for you to understand what is the situation of the organization, because then you can see exactly where you are operating in, where nexus already been triggered, either physical or economic, and if you have any tax liability already, what is the tax liability? Then you can understand what you want to do in terms of next steps. In the states where you don't have any liability, go ahead and register and start collecting the taxes. But if we find there are some states where you have substantial exposure, then we need to think what are the best alternative for you to mitigate and to reduce the exposure. And there are many options, okay? You can either, if it's a small money, maybe you can do some back filings and remit those funds. If it's a big amount, so maybe you better to do a VDA. VDA is a voluntary disclosure agreement where you can waive the penalties, which can be as high as 25%. So there are a lot of options for you to understand what you need to do. So this is why I think the assessment is a tool that can give you a lot of insights about your situation at the beginning. I think that's it. I'm going to skip to some questions. You have here a link to reach out to us. You can go to our website also, reach out to our sales tax experts and to ask them whatever question you want, and to see how we can help you. So let's move to some questions. 1 second. Yeah, okay, I see we have a bunch of questions. So yeah, let's discuss about product. Yeah, so one of the questions are the monitoring the nexus and the product taxability. So yeah, we are not need to monitor your products, but we do monitor what are the tax treatment and whether it has been changed. And I guess what you're asking is that if we are monitoring economic nexus, by the way, we are also able to monitor physical nexus because we can integrate to HR systems. So once the nexus concept is being covered, the way it works, each one of your items being classified and get a tax code that related to our platform. And when we do the analysis, and there is an API call to our system, so we get the tax code that we assigned to your products. So, and this tax code is being updated all the time. If the state change the tax treatment from taxable to non-taxable, this tax code change in our database. So you don't need to do anything. We always know what is the taxability of our products, and when it's being changed, so you will see the change specifically. And obviously it will be reflected in your invoice. Yeah, we will send you some recording of this after this webinar. Let me skip to the next questions. Yeah, so there is a question about a marketplace. Okay, it's a good question. If you are selling through marketplace, whether it's tangible items that you are selling through Amazon, or if you are selling a software through AWS or Azure or whatever, those marketplace has very specific rules about sales tax. And the good news is that the marketplace is the one who's in charge about the sales tax obligation. So if I'm selling, I don't know, pens through Amazon, so as a seller, I don't have any obligation to collect whatsoever taxes because Amazon does it on my behalf. However, if I'm selling through my, let's say, my Shopify or my website, the other items, then those items should be taxable. And another thing to keep in mind that there are some states that the marketplace transaction that you did being counted for your economic nexus threshold. Okay, so depend on the states. So some states take this into account. So I hope I answered the question. If you have employees in a certain US state, do 100 limit should not apply. Yeah, that's correct. A nexus can be either established either because of physical nexus or economic nexus. So if I have employees, I don't really care. I have a nexus from the date that my employee started in the state. I don't really need to get also to economic nexus. And even if I don't have any employee, then Nexus being triggered only from the date when I exceeded the threshold. Okay, it's a good question also. What happens if you are selling, and it's a bit tricky, if you are selling from both of entities, like if you are selling from your US parent, from your UK parent company and from your US subsidiary. So Nexus being calculated based on each entity separately. So, and then once it's triggered, it affects the entire group. Let me give you an example. Let's assume that the threshold in Michigan is $100,000. And your UK entity so far did $60,000 of transaction to customers in Michigan. And your US subsidiary also did $60,000 of transaction in Michigan. So currently, each one of them doesn't have Nexus. But if you're looking combined, they do have Nexus they exceeded in $20,000. But Nexus says, I'm looking on each entity separately. So once each one of those entities will exceed the threshold, it will affect the other entity as well. It's a bit complex. Let us know. Let us do the work here, but this is how it generally works. Where we can find a list of services and products that are taxed or exempt in each state, you can go. Usually, it's in the regulation of the state. It's not that easy to get that, but if you eager enough, you can go to the state website. Type sales tax on Google and then state name, and usually there are some links to the regulation itself. But pay attention; it's not that easy to understand. Some regulations are very old; they are not described. For example, what is a SaaS? They are speaking about digital products. So now I'm asking myself whether my product falls under digital products, yes or no. Maybe my SaaS is not a computer software, it's rather than data analysis. So it gets complex, but you can see the regulation, and if you need any help, you feel free to reach out to us. Yeah, so about the monitoring of the Nexus, yeah, so once our system recognizes that you hit the threshold, you will get immediately notification, and then you can either approve it immediately so the system can register you and start to collect the taxes. Do you have either of the states? Yeah, you can see on our website what is the list of states that SaaS is a subject tax and exempt. You can even go to one of our articles. Another question that I see here, and I think we don't have much more time, so I'm going to finish with the last two questions. Is how do we know if your product is taxable or not? So generally speaking, when you hop on a call with our experts, they will know to tell you what is your product classification. And then based on that, it tells you what is the tax treatment in each state. But as I said at the beginning, there are some products that can be complex because they are involving different components of software and tangible items. And then if we feel there is a complexity, so we would recommend you to do an analysis of your products. It's not that complicated, but it's something that you should know that we prefer you to have analysis rather than to tell you that your product is a SaaS, but when the state will audit you, they will tell you you should treat it as a data processing services, which has completely different treatment, so which might put you at a risk. So usually it's supposed to be simple, but when we find it very complex, so we recommend to do and to perform an analysis specifically. Last question, and if you have more questions, so feel free to reach out to us. When we need to register, So as I said, once you hit the threshold, usually either physical, and there is no threshold for physical, it's the start date of the employee. But once you hit the economic nexus threshold, there are some states that give you, there says that you need to register from the next transaction. There are some states that tells you that you need to register within 30 days. So it very depends on the state. Okay, let me summarize. I think if you don't have any, if you have more questions about the concept of a nexus, or specifically about product accessibility and how things are working, feel free to reach out to us. Bear in mind that the complex for foreign entities, like UK entities, is understanding the concept of nexus. This is where it gets tricky, because you need to calculate your transaction that your entity did in the US, but you need to take care also about your employees that located in each state. Anyway, if you have more questions, our experts will be more than happy to answer you, and feel free to reach out to us, and wish you a great day and good luck. Thank you, everybody.